If you're thinking about buying residential real estate as an investment property, is the DSCR loan the right option for you? The bottom line up front is while the DSCR can be great for people who are self-employed or have non-traditional income sources, it's not ideal for every investor. I'm Scott with Homeport Residential, and let's go over the DSCR loan basics and guidelines. When does the DSCR make the most sense, as well as some of the pros and cons. The debt service coverage ratio loan is what's referred to as a non-qualified mortgage that allows investors to purchase residential real estate as an investment property that's based on the property's rental income instead of the investor's employment or personal income. Let's start off by going over the loan's guidelines, and this is a good time to make a quick point about non-QM or non-qualified mortgages. It's just a fancy way of saying that they're non-conventional loans that allow you to qualify for the loan based on alternative methods. The most important thing for you to know as an investor about non-QM loans, including the DSCR, is that unlike conventional loans, most non-QM guidelines can vary dramatically based on the lender that you're working with. So you might need to check with multiple lenders to find the loan with the right guidelines based on the specific property you're trying to purchase. Our first DSCR guideline is, does the property have a positive cash flow? To determine that, you're going to divide the property's rental income by its principal, interest, taxes, and insurance payments, and that result is called the debt service coverage ratio, hence the name DSCR. For this calculation, you can use either the property's current rental income if it's already a rental unit, or the projected rental income. If the property is not currently being used as a rental, you will need to have a rental appraisal conducted for the home. Ideally, you're looking for a DSCR of 1 or higher, although there are some lenders out there that'll loan to you with a ratio as low as 0.8. However, you might need an extra 6 months of reserves available, a higher credit score, and a higher down payment anytime your DSCR ratio is below 1. Overall, the higher your DSCR score is, the easier it is to qualify for the loan. The next guideline is the DSCR loan can only be used to purchase investment properties and with a limit up to $2 million. Keep in mind, the higher the purchase price is, the more stringent the requirements will be for the loan. For example, on purchases below $1 million, you'll need one appraisal conducted on the property and generally around 3 to 6 months of reserves. And for loans of $1 million or more, you'll usually need 2 appraisals and at least 9 months of reserves. Next, there's no personal or employment income required for the loan, and the DSCR tends to have lower FICO score requirements than conventional loans. I have seen scores as low as 660 approved for the DSCR, but generally speaking, the lower the FICO score, the higher the down payment required and the more reserves you're going to need. Also, you can find DSCR loans that require as little as 3 months of reserves required for the loan and putting as little as 20% down. Like we touched on earlier, the higher your DSCR ratio is on the property and the higher your credit score is, the better loan terms you're going to have. First-time investors can also use the DSCR loan. However, if you have less than 12 months of landlord experience, you generally need a higher FICO score, a higher down payment, and higher reserve requirement depending on the lender you're working with. Also, most lenders will allow you to use short-term rental income to qualify, which can go a long way to giving you that higher DSCR ratio. Although, if you're using short-term rental income, you'll generally need a higher down payment. And if the short-term rental is a condo or in an HOA, you'll need a letter from the association stating that short-term rentals are approved for the unit. The DSCR has a few different loan options you can choose from. You can either go with a 30-year fixed rate loan, an adjustable rate loan, or an interest-only loan for the first 10 years, and then you pay the principal and interest for the remaining 20 years of the loan. There's also a cash-out refi option available with the DSCR as well. Now that we've covered the big ticket guidelines of the loan, let's quickly go over some of the pros and cons. Without a doubt, the number one pro of the DSCR is flexibility and the ability to qualify for the loan even if you're not currently employed or you have non-traditional income. Without a doubt, this is a one-of-a-kind loan product in that respect. You can also use the DSCR loan more than once. As long as the property you want to purchase has a positive cash flow, some investors have used the loan to purchase up to 7 or 8 properties at any one time. And the DSCR loan has lower FICO score requirements than regular conventional loans, which can open up investment opportunities to a lot more buyers. Okay, let's go over the biggest cons of the DSCR. And the number one con of the DSCR loan is you're going to pay a higher interest rate than a fully documented conventional loan. The rates are normally about a full point to 1.5% higher for a DSCR loan than a conventional loan. The second biggest con of the DSCR is they generally come with a prepayment penalty. So if you pay off or refinance your loan within the first 3 to 5 years, you're going to be penalized. Now, generally that penalty goes down each year, but keep in mind if rates drop after your purchase, you're not going to be able to take advantage of those lower rates for a few years without paying a penalty. So those are the DSCR loan basics, and like we discussed earlier, it can be a great option for investors who are self-employed or have non-standard income. However, because of the higher interest rate and prepayment penalty, it might not be the best option for borrowers who have verifiable income and can take the time to do a fully documented conventional loan. Also, because it's a non-QM mortgage, the guidelines for the loan can vary significantly from lender to lender, so you might need to shop around to find a lender that's right for you and the specific property you want to purchase. Finally, I'd like to mention that I'm a Navy veteran, full-time realtor, and mortgage broker, and I work with buyers in all 50 states. I'd be happy to answer any questions you might have, give you a second opinion on your loan estimate, or help with your DSCR purchase. Feel free to give me a call or leave a comment. Thank you so much for watching, and I'll see you in the next video.